aspire to bigger and better things. And as a result of that, that makes this place a better place for everyone. And I think you all would agree, or as I say around my way, and the church said, Amen. So with that said, we're got to do a couple of quick things, and then we're gonna get into the show for today. But I want to welcome you to engage and interact. If you have any questions, you're free to ask those questions. We'll save some time towards the end, or even after the show, if we can't get to them, while the show is going. But you have my word, we'll get back with you with the pertinent and correct information. So any questions, please put a preceding Q in front of the question. And then if you got a statement, you want to say it with your chest, do that. We don't have to agree, but we have to be respectful, right? We have to be adults about it. So enough said there. Put a statement in front of it, or S in front of your statement, and then, let it fly. And yeah, I think that's it. So again, guys, Black History Month. One fact about this month as it pertains to my community, my cohort, folks that come from where I come from, is the home ownership rate is still somewhat challenged. Although I'm not saying everyone is going to be a homeowner or even should be a homeowner, but we do want to continue to focus on it. I know a couple of years ago, because of what was going on, there was a huge push. But with all things, as time goes by, life begins to happen again, distractions, things of that nature, and you're on to the next. So I just want to put it on your mind that there are several different assets, but that's the key to grow or to build wealth. Okay. You must own assets and not just be a consumer. So, primary residents are one of those assets. Okay. So, if you'd like to learn more about that, feel free. Subscribe to the channel, hit the notification bell for when we come on. Right. So, and in keeping with the show flow that we have, I want to talk to you guys today about the credit section of the show. Okay. And we always like to give a credit tip for those of you that might be in the process. And to be honest with you, this credit tip is something that's sage. It's evergreen. It's timeless. It's stuff that you can use. But one thing that I've noticed in the daily practice as of late are consumer finance accounts have been looked at negatively as it pertains to underwriting, especially when the majority of the accounts that you may have open are derived or come from a consumer finance company. Examples: department store. I'm in Texas. That's the home state. We live nationwide, but in Texas, Cons, especially in South Texas, San Antonio, Houston, down on the bottom, right? Cons is a store that we see a lot. Some of you guys that are dealing with credit or trying to reestablish credit, Affirm, the pay, kind of like the old way back in the day, but you get it and pay it, get it now, pay it later. You really have to watch those types of accounts when you're building your profile or in that credit mix. Again, if you watched the video that we did a couple of weeks ago, I gave an example, real world example of a client, 748 middle score, okay, but several consumer finance accounts, and the description code, it's 006. For those of you that might want to know that, for the three agencies, Experian, TransUnion, and Equifax, it's synonymous with all three agents, but that was one of the reason codes. So said all that to say this: you want to be very mindful of that when you're establishing a credit profile or trying to reestablish. I would advise or admonish you to use the authorized user strategy. That's still a good strategy if you don't have to pay anybody, and if it's used in the spirit in which it was created. You deal with a family member so that trade line will remain on the account. If you're getting ready to purchase a home, you want to communicate with your lender of choice, because there could be some caveats to those authorized user accounts, i.e., we may have to validate who's paying them. If not, you might have to calculate that in your debt to income ratio. So, as with all things in life, it's about planning, being proactive. But again, authorized user account opposed to just a ton of consumer financing accounts. Um, what else? Your credit union type or the secured credit card route. That might be a better strategy because those consumer finance accounts are associated with people that have higher risk, or they're higher risk in that they pay a lot of interest. Um, the payment histories might not be, where they need to be and things of that nature. So you just want to be very careful. And as I wrap this section of the show up, uh, trended data that is going to be coming down the pike. Although a lot of people think that it's going to be a good thing, I want to be early. I want to be a canary in the coal mine, if you will, to advise those of us that think we can get a quick fix with these credit scores, thinking that I could fix it when I need it. We need to start changing the behavior because really trended data was designed or developed for the unbanked. There's a lot of people uh, in certain communities that don't use traditional banks. So that's what that model is based for. But I can see it hurting a lot of us that, here in America and think, you can just change things at the drop of a hat. So that trended data thing is going to start taking into account broken leases and rental history. Starting to see that a lot as well. Some of the borderline approvals that I'm seeing, if we can get and validate through the proper validation source, uh, rental income, or not rental income, but rental payment history, that could bolster an approval, right? So it's already being baked in the cake. Going to be going back 2 years minimum, sometimes 36 months, looking at your behavior. So I believe I hit that in the head enough. Consumer finance accounts, watch them. If you need some help in that area, send me a message. I'm not a credit repair person, but credit is a major part of what we do. And in my 20 years of experience, know a lot. And depending on where you are, more times than not, if you're serious and wanting to move the needle, we could give you the advice. It's on us. The information is on us. The implementation is on you. So reach out, and we don't mind helping. Again, guys, if you have any questions, comments, concerns, engage, interact, safe place, and those things help other people. You would not believe the the questions, the calls, the comments that I get, and I'll be respectful of people. So I almost feel like a doctor sometimes or an attorney, because I can't divulge who I'm able to talk to, but you guys will be surprised. So ask the questions if you're not afraid to. Moving right along. Um, Another section of the show that we have is called the guideline gotchas. So the spirit of the guideline gotcha section is me looking at what has been done over the this past week, and looking at certain guidelines and things of that nature from a 10,000-foot view, and trying to distill it down to bring out the best points that might help the most people. Okay. So this is not an all inclusive type section, but one thing that I'm noticing, and I think it's sage for this show today in this conversation, as a result of where we're coming from or coming out of, a lot of you have either become self-employed or 1099. You may have even taken some time off from a job, and just are recently getting back to work. Just had a conversation prior or earlier today with a someone that's trying to get prepared to purchase in 2023. And long story short, they've been off work for a full calendar year. So here is a quick, easy um, template for you. Again, not all inclusive because everybody's situation is specific to you. But here's the deal: if you've gone from one W-2 job, we're talking about W-2 employees, self-employed, got to have 2 years, okay, or have been in business 5 years. I digress. W-2 employees, where you're working for somebody, they're taking the taxes. You don't have to have work for the same employer for a 2-year consecutive history, you have to have a 2-year history, work history. Okay. But let's say you left one job and took some time to find another job. Okay. As long as it's this side of 6 months, okay, then typically, if it's one day to, what's 6 months? Is that 180 days? Whatever 6 months is, right? The day before 6 months, then you go back to work in the same line of work as a W-2 employee, 30 days, depending on what your situation looks like. Worst case, 3 months, okay, back on the job, and we can use that income. Here's the thing, base income, unless we can validate all other types of income. So your base income is what you're going to get for sure. Overtime, commission, bonuses, per diem, uh, some of these night differentials, we have to get an average, a 2-year history. So that's another point to this. But as far as the job gaps are concerned, anytime you're out of work for 6 months or more, got to be on that job a year. Now, there's always extenuating circumstances, but it's kind of like bankruptcy. Uh, Not you, but folks before you have worn it out. So, you getting a divorce and things of that nature, those aren't extenuating circumstances. So if you feel like you may have an extenuating circumstance, there's loan types for that. And if we can document, documentation is key. Uh, it's never always a no. Again, that's why it's very important for you to consult before you start shopping and have a plan of action, be transparent and proactive. So 3 months, 6 months, those are the two key type numbers. If you've been out over a year, again, if you've been out of work over a year, got to be on that job a year. Okay. Because we have to show the stability. That's the whole thing with the income, right? It's the stability. You may feel like you may have just gotten a job and you're making $15,000 a month, but you may have only been doing that for 3 months, or you may be on a contract, right? Our job is to follow the guidelines and determine that the likelihood of you receiving the income that we use to qualify you with is going to happen at minimum 3 years into the future. And so going to be conservative in some cases and things of that nature, but that's a good thing for you, because conservative underwriting a lot of times prevents you from overextending. And I know that might not be popular with some folks that, want to sell you things, but I don't want you to just get into the home. We want you to thrive, or to the house. We want you to thrive, make memories, and have the proper shelter so that if and when you decide to exit, it's a good thing, and you won't have to exit before you need to because you can't afford it. So that is the guideline, got you, of the segment. So of the show. So with that, guys, I'm a little parched, man. Take a few minutes. If you have any questions, statements, get yourself together. Watch this quick little video, and then we'll get back into the last part of the show and let you go. Well, I guess I'm still here, right? I hit the wrong one. This is the one I wanted you to see live. Attention, Texas homebuyers. Did you know that the Texas State Affordable Housing Corporation, also known as TSHAC, has several down payment assistance options available to you? These programs are designed to help make home ownership more accessible, and yet they are often underutilized. You don't even have to be a first-time homebuyer. Don't let the lack of a down payment and or closing cost funds hold you back any longer from realizing your dreams of home ownership. Schedule a consultation today and learn more about these great resources and start your journey to home ownership. So that's what I was trying to do, right? Again, that's why you got to watch live, right? You get to see the bloopers, but perfect segue into the last segment of the show. Down payment assistance is still misrepresented and I'll take responsibility for the lenders in the house that might be watching this. You guys have to understand that when buying a home, not only do you have your down payment, but you have closing costs that are a part of the total cash, the total amount of monies that are needed to consummate a transaction. I won't go deep, but if you want additional information on closing costs and things of that nature, I have videos for that. Just shoot me a message. I'll send you the video, and you guys could go deeper to get more understanding and more comfortable with that. But down payment is just a portion of the total amount that is needed to to consummate a closing transaction. With that said, and per the ad, if you're in the state of Texas, I tell you, man, there's so many different programs that are available. Okay. And got another video on YouTube doing very well, but it breaks down some of the larger down payment assistance. But just for this video, let me reiterate, and this is what's applicable nationwide. Because again, we live nationwide, but we only do down payment assistance in Texas. When or if you decide to purchase a home and you're looking for funds to help you with your down payment and or closing costs, it's not going to take care of everything in all scenarios. Some maybe, but if you're looking for those things, you always want to start on the city level. City level, okay? Because your city may offer some type of down payment assistance program. And from my experience and deep research and education, because that's what I do, those are going to be the programs that offer the most, give you the biggest bang for your buck. However, those also are the programs that are designed for the underserved. Okay. A lot of you guys, and this is not a negative statement, but a lot of you guys are savvy, right? These city programs are going to have very, very low income thresholds because, again, the spirit is to help those who might not have a chance otherwise to get into a home. I'll just leave it there. Also, they're going to have purchase price limits. Again, it's not for you to buy a McMansion and you making $200,000. It's not really for you. But if you fall within the parameters, more times than not, those programs are going to provide a large chunk of money, right? That you may not even have to pay back, which leads into the second thing on the city level. This will be applicable city, state, and nationally. You want to make sure you understand the cost to you as far as payback is concerned, and or how long you would have to maintain the home or live in the home as your primary residence to make sure that there's no clawbacks, right? And again, if you think about it, once again, a lot of you guys are savvy. Got a lot of investors out here using that. I'll digress. Let me get off of that. Back to the city programs. A lot of times, if you have to live in a home a certain period of time, if you think about it, it's not a big deal because these folks, that's where they're going to live. Okay. So city is the first level. State would be the second level. Now the state programs are going to be more flexible, more lenient, and give access to more people in the forms of grants, silent seconds, even repayable seconds. Okay. All of these programs, even on the state level, are going to be based off of your income and where you are. There's something called targeted areas. Those are areas that are being built back up, right? Got to be careful. So if you're have an eye and you've been in a place and you understand how to find a targeted area, that might be an opportunity for you to get in and even make more monies than the area median income will allow for. If you're a veteran, y'all need to holler at me. If you're a veteran, you guys got, not only do you have the best loan for mortgages, but you have the best benefits bar none, and you should, right? You earned it, you deserved it. So you deserve it, pardon me. So those are some of the exceptions that people can take because of their title, their past employment, or you could be a hero, police officer, nurse. Got a video on that too. Reach out to me. Not going to do it here, but we can get you the information that you need. Now, there's also national programs. And on the national level, I mean, it's really just, back in the day, because I'm an old head, back in the day, you could get 100% financing with FHA. And then there were ways to get around it and things of that nature. Those things are coming back. They're just veiled a different way. What you need to know and understand is this. The greater the risk, the more the price. Okay. The greater the risk, the more the price. So that's another thing that you need to understand when you're looking for down payment assistance. The less you bring to the table, it's going to cost you. There's cost. I don't care if you're a broker, because we broker too, or if you're correspondent or a mortgage bank like we are. I got the best of three worlds, right? The devil is in the detail. Nothing is free. And so you just want to deal with somebody that's going to be transparent and explain to you where the costs are, but there are costs. Okay. Nobody's working for free. So once you get the right information, you'll know how to handle it. Last thing I'll say, right? And I don't know how to I'll just put it over myself here. You know what? Let's do this. I'm going to just put it on the screen. See that right there? That's a bond. Okay. Texas State Affordable Housing Corporation, TSHAC. That's the best down payment assistance program in the state of Texas. Anybody want to challenge me on that? Do so. We can have a nice debate. Have the most options, the most flexibility, and very, very quick if you know how to do it. There's other programs, no disrespect. We do them all. This is the best one. Okay. And so let me take a step back. This is the best one on the state level. Again, if you can qualify citywide, if you have a choice voucher, right? Section 8 is what they used to call it. And you're going through the self-sufficiency, and your PHA offers that. Okay. Find somebody that'll do that loan for you. That's a longer process, right? NACA. People talk about that as well. But the PHA and NACA, I love them. And what a lot of people don't realize is your credit is going to be good. They're not going to let you buy more than you can afford, and you're going to save some money. So if you don't want to go through all of that time-wise, and you have the ability, you can just do it anyway and get a regular loan. But it's up to you, right? Because choices are the spice of life. So you know what, guys? I think I hit it on the head. I don't see any questions. I don't see any comments. And we've gone through the intro, right? Study, man. Study your history. Representation is important. Bill Reeves, look him up, right? You ever heard of the Long Ranger? Ask some of your grandparents and stuff. That was based off of that gentleman, right? Ex-slave, great bounty hunter, okay? And he didn't kill all his folks. He didn't like to kill folks. He had to kill a couple of them, but for the most part, he brought them back alive. So that's where the Lone Ranger came from him. And so do your research, man, because again, that's why I try to come on, do these videos and things of that nature. We might have an aspiring loan officer. And so if you see somebody that has the same melanin that you have, whatever community you're in, it can inspire you. Say, hey, I could potentially do that as well. So we know we're heavy in sports and entertainment, but we're also heavy in business, bounty hunting, the whole nine. So do your research and inspire yourself, challenge yourself to be better. So with that, my time is up, guys, but I thank you for yours. As I always say, let's be good to one another. Let grace abound. And until the next time, peace. Y'all be blessed.